A very good evening, dear students. So, I have come again here to test a bit of your knowledge. We are now doing chapter 9, Accounts of Companies. So, till now, we have covered most of the sections of this chapter, and we are just a few more sections away from completing this chapter. One of the major sections that you still have to learn is section 135, which is dealing with corporate social responsibility. This section is very important from the point of view of like you have to remember that on what all companies the provisions of CSR shall be applicable, what are the limits and other relevant provisions of the section. Generally, in as per past practice, we have seen that in 2 to 3 attempts, they generally ask a question of around 5 marks from this chapter, or basically from this section also. So section 135 becomes very important for you to understand. Then we have one major important section, that is your section 133, and then 138 dealing with cost accountancy, uh, cost accountants. So let's start with today's session, but before that, let's brush up what you have learned in the previous 2 classes. So we have dealt with it before also, that wherein we will be playing with the rapid fire round. So I will be giving you questions, and it's a fill in the blanks kind of a format. So what you need to do, just write the answers at one place and then just send it in the chat box. Like there are 10 rapid fire questions. And I would advise, if possible, to write the relevant section along with the answer, like answer, and then bracket me, you write the correct section. So I hope all of you are ready and let's start with it. So the first question is, every company shall prepare and keep at its dash office books of account. Next, the books of account shall be kept on accrual basis and according to the dash system of accounting. Next, the books of account must be retained for a period of at least dash financial years immediately preceding financial year. Next, the financial statement shall give a dash view of the state of affairs of the company. Next, consolidated financial statements are required if a company has one or more. So in this, there will be 2 to 3 dashes. The board of directors shall lay the financial statements before the company at every dash. The students who are writing the answer, if possible, kindly write the relevant section numbers and write all the answers at one place, like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Next, a company shall reopen its books of accounts only on the order of dash and dash. Eighth, the board's report or the report of the board, as we say it, should also include details of dash given to directors and KMP, if any. Next, the requirement to prepare a cash flow statement does not apply to one-person company, small company, and dash company. Tenth, a copy of the tribunal's approval. This is with respect to which section? This is reopening of accounts. Must be filed with the dash within the prescribed time. So I'm telling you, this is the reopening of accounts. So students, these are the major questions. Now let's see. I will just read the answer. Okay, so some of the students have given the section numbers also. So my PPT has gone somewhere. Screen is not visible. The PPT is not visible or nothing is visible? Yes, even I can't see that and I don't know how to. I'm sorry, but can you just give me a moment? Student, sorry, students, for the discrepancy cause there was some technical error. So let's just see the answers. So the first question was that every company shall prepare and keep at its registered office books of accounts. So this is section 128. The books of account shall be kept on an accrual basis and according to the double system of accounting. Again, section 128. The books of account must be retained for a period of at least 8 financial years. Okay. The financial statements shall give a true and fair view of the state of affairs of the company. Consolidated financial statements are required if a company has one or more subsidiaries or associates or joint ventures. The board of directors shall lay the financial statements before the company at every AGM. A company shall reopen its books of account only on the order of a court or the tribunal. The board's report should also include details of remuneration given to the directors and KMP, if any. The requirement to prepare a cash flow statement does not apply to OPC, one-person company, small company, and dormant company. A copy of the tribunal's approval must be filed with the registrar, NGO, registrar within the prescribed time. So the prescribed time is, Farhan, correct, 30 days. Yes, so there is no word as NGO. It's okay. So can I get a score of you guys that out of 10, how many are correct? Good. 9, 10, 7. Very good, Soumya, Anubhav, Mohammed, um, Julie Kumari, Mohit. Very good. Golti, you have okay, okay. Almas, very good. So if you see, these questions were like in the format of the fill in the blanks or rapid fire. However, suppose what's the point of doing this exercise? It's from the point of view of revising. And if I see just one question here, supposedly I give you, okay, consolidated financial statements are required if a company has one or more subsidiaries or associates or joint ventures. So you have to now remember the provisions related to CFS. And why we are saying, in I think 2 attempts before or 3 attempts before, we got a question in the examination with respect to this, that the company was having the subsidiary and it was not a wholly owned subsidiary, and then they asked you to apply and it was written clearly that it's not an associate or a joint venture. So many students in that question got confused that since it's not a wholly owned subsidiary and it's not an associate or a joint venture, so they got confused that whether the provisions of CFS will be applicable on such a company. What happens is these are very small things, but if you remember it through any tricks, they will enhance the quality of answer, because you don't have to then keep on remembering, okay, what was written. If you have remembered it even through these MCQs or these fill in the blanks, automatically your mind will go to that. Okay, so CFS for all subsidiaries, be it a partially owned subsidiary or wholly owned subsidiary. I'm not talking about the exemption part here. So always keep on revising in any way you want, but keep on revising the provisions whenever you get time. So, ma'am, CFS provisions will be applicable for both wholly owned subsidiary and partially owned. Correct. Anil, that is like, that's why I say they are saying all subsidiaries. So that's all from my side. And sir, I welcome you, sir, Shrikant sir.
Yes, madam. Shrikant here. Yeah.
Yes, sir. Sir, please guide the students on rest of the sections.
Definitely, madam. No doubt.
And
In
thank
fact,
you, my students.
I was waiting with a bated breath because this is a test for me as well as for them. So I'm very happy. Thank you. Good evening and welcome once more to the last leg of our journey in understanding the concepts of accounts, etc. You have made some good progress and I'm very happy to see you are thorough with the fundamentals. So Request is you can put all your queries in the chat box itself so that I can keep looking at it at frequent breaks. Right now, let me share my screen. Yeah. Now, I have to bring it down. Is it not coming? Yes. Yeah. Now, in the last class, you must have covered quite a lot of distance. So, permit me to go to the appropriate topic. Today, we will begin with section 132, which is like give me 1 minute. I don't know why this is going off. This is some problem. Hope screen is visible. So can you confirm if screen is visible? Okay. Now, so let me quickly run like this and move on to 132. 132, you already seen all this, I assume, and I should also presume that you have covered 137. Okay, with that, we can move on to 130, 131, etc. Just now you took questions in that. Yeah. 132 deals with the National Financial Reporting Authority. You might remember our earlier discussions on dividend when we spoke about the Investor Education and Protection Fund Authority, IEPF authority. So the word authority means it is an instrumentality of the state. It is set up by a particular ministry for the purpose of monitoring or governing any sector. For example, you have the IRDA, the Insurance Regulatory and Development Authority. So IRDA has its brief. It monitors and controls insurance companies. So like that, we have many authorities. And one of the authority which has been set up is NFRA. Again, NFRA is not of recent origin. It was mooted as early as when the Satyam scandal took place. In our discussion on accounts, I might have already mentioned to you that the Satyam scandal, which took place in 2009, had left a very powerful mark in the psyche of the governing bodies, governing authorities, the governance bodies, MCA, SEBI, etc. More than SEBI, I think MCA was really afraid. Okay, because SEBI had already seen enough and more. So for SEBI, this is nothing new. A single company was nothing for SEBI. SEBI has seen whole market scams. As I mentioned to you earlier, SEBI has seen Harshad Mehta. SEBI has seen Ketan Parekh. Their grandson also SEBI will see. SEBI is not worried. But MCA, not having much exposure to this type of things, suddenly found that it was caught with Satyam scandal. So the framework seemed to have been shattered. And obviously, one of the important pillars of that framework were the auditors. So therefore, it was very easy to hit there. See, when you don't know what happened, it's easy to see whoever is still standing and that's the auditors. So let's hit them. So the framework was completely reviewed with a view to finding out where the auditors could have gone wrong. And they felt that one important problem is these gentlemen are self-regulation. They have their own control over their members. If any member is doing something, we don't know what's happening. It is a self-regulatory body like that they felt. Therefore, no. You need one more authority which would monitor certain classes of companies. 1 second. மனோஜ் ஆன்லைன் கிளாஸ்ல இருக்கேன், நான் இப்ப பேச முடியாது. நான் திருப்பி திருப்பி பண்ண 8:30 மேல பண்ணலாமா? So sorry, I'm putting it in silent mode. So now, so the NFRA was meant to monitor the auditing profession. One, two, all along, MCA had always been saying, look here, accounting standard, we will be announcing. Auditing standard, we will be announcing. It will be under our control. Okay. What is the ICAI role? You guys tell us what is what. We will announce it. We will make it mandatory. We will see to it that it is being followed. Agreed. So, in order to do all these things, they formed this body, the National Financial Reporting Authority. Okay. The post-Satyam, shall we say. Today, we use words like post-ideology politicians, post-truth world. Like that, we are living in a post-Satyam world. So this is a post-Satyam world where anything and everything which is done will always be having its bearing from what happened in Satyam. Why are we having more control on auditors? Don't even ask us. Go back to Satyam. What happened? You guys were not at. So therefore, we'll control you. So it's like that. I have my own view on this, but point here is that Satyam is the root cause. And one single member signing a balance sheet rightly or wrongly causes damage for the entire profession. Okay, and all of us are now under this scrutiny. Luckily, the NFRA doesn't have brief over all companies. It has brief over only certain classes of companies. We'll see what they are. The Companies Act 2013, when it came, one of the main things that they did was put in place the rules and all, and for regulatory framework for the composition and constitution of the NFRA. Okay, so the idea is that the NFRA as an independent regulator for the auditing profession will improve the transparency and reliability of financial statements and information presented by listed companies and large unlisted companies in India. So basically, we are targeting listed companies and large unlisted companies, right? So these are the functions, okay, of the NFRA. What is it? What is the NFRA supposed to do? A, make recommendations to the central government on formulation and adoption of accounting and auditing standards. Okay. Ideally, they are supposed to come out with it, but what they do is they ask the ICAI to do it. And then they go through it. I don't know whatever. And then they say, this is it. One good thing is there's a positive side also to this, which is, as I already mentioned, earlier when the institute was giving the standards, it could only make them binding on its members, like practicing members like me, who are signing audit, who are in the audit and test function. We were bound by the guidance notes, the the opinion, the auditing standards, guidelines and all, guidance notes and all that. Now, the fact that NFRA is promulgating it or NFA is announcing it, then, because NFRA makes recommendation to the ministry announces, okay? The central government here, CG means central government, not corporate governance, central government. It is, so CG, once it goes to CG will announce it through notification or whatever. Monitor and enforce the compliance with standards. So on a constant basis, NFRA will go through audited balance sheets of large companies. And if they see any discrepancies, they will immediately catch hold of the company and, of course, the auditor will ask for further explanation. Whether the audit process itself is correctly done. See, in Latin, there is a famous Latin maxim. Okay, Latin maxim, which is custodius ipsos custodes. Quis custodies, ipsos custodis. It's a very moot statement, which is often quoted, especially with regard to FBI or CIA, bodies like that. FBI in India, sorry, CBI in India, no. Who will police the policeman? Quis custodies, ipsos custodes. Who will take custody for the custodians? Technically, who will police the policeman? Very bluntly stated in simple English, his custodius ipsos custodes, who will police the policeman? So you and I as chartered accountants, we are given the power to audit companies, sign balance sheets. Later on, when you come to audit, we'll talk a little bit more about this. So we are like policemen, we go for an audit, we try to find out. Of course, as we already discussed in the earlier session, my responsibility towards fraud is, we'll be seeing that there is a responsibility. When I sniff a fraud, I'm supposed to report it immediately. I cannot make a blind eye and go on with my audit and say, I'm only a balance sheet auditor, I don't have to bother about this. No. If I smell a fraud, because of my training, because of my ability to put two and two together, I am bound to report it to the audit committee or to the central government. But who will monitor whether I'm doing it? Whether am I doing my job right? So this is a moot question. Quis custodies, ipsos custodes. See, the problem with quis custodies, ipsos custodes is, see, if you want to monitor policemen, you should yourself have the knowledge of policing. So you want to monitor my work as a member of the Institute of Chartered Accountants of India, you should be a member of the Institute of Chartered Accountants of India. I mean, this goes without saying. For example, see, suppose a senior surgeon is going to be taken up for disciplinary proceeding for a surgery. See, suppose a patient is claiming that the surgery was done negligently. Agreed. Now, who can decide? Lay people cannot. Another surgeon can only decide. And that too, that surgeon should have the similar or equivalent ability, equivalent experience. Only then he can go through the whole process, maybe a video. Nowadays, everything is videotaped. The complete surgery is videotaped because of medical negligence. He has to go through it, and then he should honestly, he should touch his heart and he should answer, given the circumstance, given the position. If I were standing there with the scalpel, if I were going to conduct this operation, this is what I would not have done. I would have done something else. I mean, why I give this medical example is to show how difficult it is to judge a professional sitting in that seat. Because gross negligence can be easily, like Satyam is a classic example of gross negligence, where either gross negligence or collusive fraud. It's either this extreme or that extreme. So it's either gross negligence of the auditor or the other extreme, where he was collusively fraud. These are different. I'm talking about a genuine case where I have a judgment. Yeah, it's a judgmental issue. Who can judge a judgment? Unless that man should have the ability to, it is not enough he is a member of the institute. He should have 25 years experience of similar companies. He should have signed the balance sheet. Such a man only can judge another professional. This is a view expressed by me. No, definitely a senior member of the Institute of Chartered Accountants of India with 35 years of practice. So, and I'm addressing a group of people who will one day become members of my institute, possibly in practice. So, in that spirit, I'm telling this. Just like a senior medical professional teaching in a medical college has certain liberties while addressing house surgeons and interns, I also take that liberty to tell you that it's not easy to judge the work of a professional. Don't underestimate this, what I'm saying. Don't just put it as a simple thing and say all auditors are frauds and stuff like that. It's not. The audit working papers have meaning. We form an opinion about everything in the balance sheet. Every line item in the balance sheet, we form an opinion. And this opinion is arrived at after a process of verification. This verification process is documented. And that documentation speaks for itself. If any one of these is missing, state gross negligence. How did you form that opinion that the fixed assets are there? I have to see whether they are there, verify whether they are present, whether they have to verify availability, whether the valuation is correctly stated, whether it's stated at cost, whether the cost is correctly stated, whether depreciation is correctly calculated, item-wise, okay, compliance with the statute, etc., etc., etc. I have to go. What I need not do is whether that asset was acquired at the best possible price. Technically, I did not see in my statutory, but as I'm going through suppose a new asset has been acquired during the year, I'm going through the capex file and I'm going through the committee recommendations. There I might find, hey, one important supplier has not been called for tender, or maybe his tender was given, but he was not allowed some technical error. So I start going deeper. Why was this fellow rejected? Was he L1? Could he have become L1? Was he then, without L1, was technical ground, he was rejected, and maybe another man was made L1 and award contract was awarded. I I give all these elaborate explanations to help you understand how the attest function is not easily exercised. We have to be very, very clear about this. So this is being monitored by the NFRA to oversee the quality of service of the professions and suggest measures required for improvement. Such a body then should have only members in practice with seasoned experience, with 45 years plus experience in practice. 3 or 4 people should be sitting in that committee. Then only it will make sense. Okay, civil servants cannot decide on quality of service of 35-year experience, 25-year experience, why 10-year experience professional. Okay, that is, see, if I had joined the services as an IRS, let us say that today I'm a CIT or a PCIT, whatever. No, my experience is different. I cannot see, as a chartered accountant practice, I cannot judge a PCIT because his experience is different. So these are very, very delicate issues that need to be appreciated before we can sit in judgment over professions. Okay, and tell them what is good or bad for them. But yes, as a conscience keeper of the nation, NFRA, quiz custodians, ipsos custodes, they can blow the whistle and monitor if there is a gross mismanagement where a whole profession becomes totally unethical, they can monitor that and say, hey, this is not fair. But otherwise, well-regulated professions need not be interfered with, is the general theme. Perform such other functions relating to the above act. So I'm giving you the background of NFRA. It is very delicate. Okay, as a subject studying in the books and maybe writing exam answers and getting marks, you can. But it goes to the root of audit and attest function. It hits everybody. We'll see the type of companies. Anybody who's auditing such a company is out. He is caught. He is on the NFRA net. Having said that, this is again another government department. I'll leave it at that. The NFRA is also part of a government department. Okay. So, constitution of NFRA, you have chairperson, not more than 15 members. The chairperson shall be a person of eminence and having expertise in accountancy, auditing, finance, or law. The chairperson to be appointed by the central government. Okay. The chairperson and members who are in full-time employment with the NFRA. So that is, they become full-time members. They sit in the NFRA building, they work there. They should not be associated with any audit firm, including related consultancy firms, during the course of their appointment and 2 years after ceasing to hold such appointment. So this is becoming relevant from the exam point of view. This is relevant from exam point of view. 2 years. Okay. After ceasing to hold such appointment, right? So try to remember that. So A was a chairperson of the NFRA. After he ceased to be the chairperson, within 1 year, he became senior partner of an audit firm. Is it correct? No, because he cannot be associated, whether as partner or employee or whatever, with any audit firm or the related consultancy firms. See, many audit firms have consultancy firms which do not perform audit and attest function, but which have common partners. Or they are sub firms. The main firm would be there, then there will be a sub firm in which 3 of those partners would be here. The 12 partners there, 3 partners out of that will be in the consultancy firm. Okay, this is common. All of them have. All the big firms have consulting firms and LLPs, etc. Okay, so nothing wrong. Okay, see, for example, I also do consulting. We have a consulting division. Okay, but Later on, when you come to 144, we will tell you about that. Where I am performing, where the firm is performing the audit and attest function for any company, that company we do not do any consulting work, or none of us do any consulting work, any other billing other than auditing. That is 144 when we come to auditing. Okay. Here, the chairperson and members are told that they, during the course of their employment and 2 years after ceasing to hold, see, this is applicable only for those who are in full-time employment. For those who only sit on the board, sit on the authority, board of the authority, this won't apply. Okay, this is for full-time. Okay, notwithstanding anything contained in any other law for the time being in force, the NFRA shall have the power to investigate into matters of professional or other misconduct committed by any member or firm of chartered accountants registered under the Chartered Accountants Act. So long as that company audit comes under NFRA. Okay, so it's now the whole disciplinary mechanism is now two-tiered, or I should say two-tiered, where certain companies which are not covered by NFRA, the member would continue to be investigated, or disciplinary conduct and disciplinary code of conduct and disciplinary committee will be our own internal. But suppose it is governed by NFRA, then NFRA will investigate into the matters of professional or other misconduct. Okay. This may be done either suo motu or on a reference made to it by the central government. See, having said that, the member who signed Satyam balance sheet has now been acquitted by the Andhra Pradesh High Court. You can check out the judgment is an open judgment readily available. It's a public domain. I'm not revealing any secrets when I tell this. He has been openly acquitted by the Andhra Pradesh High Court, where very clearly it has said that, I think Telangana High Court or Andhra Pradesh High Court. Judgment is very clearly there. It says that the auditor has not done anything wrong. He is not fraud. Therefore, he has been acquitted by the court. So that is also there. Whatever NFRA may do, NFRA is not a ultimate authority. The judicial framework is also there, to which the member can go and have recourse. Okay. So this may be done either suo motu or on a reference made to it by the central government. Suo motu means on its own motion. For those of you who may not know, on its own motion, by itself. See, NFRA by itself can take that. Okay. What happens, if you are coming under NFRA, you have to file your audited accounts with NFRA. And NFRA will go through it for potentials of fraud. See, it could be that the member has reported something in his CARO, the company's auditors and other report order. Company's auditors report order, CARO 2020. And based on that, he would have even qualified. Nobody notices it. Nobody reads it. Somebody in NFRA may read it and then pick it up. Why not? If they do something like that, it will be nice, where they actually read the qualifications given by the member, possibly ask the member, boss, what is it you are trying to say? And let the member give his views and all. It will be nice. Instead of victimizing us, they can as well use us as partners in the corporate governance process, which we are. Members of the Institute of Chartered Accountants of India have been boy partners. We have been trailblazers in the corporate governance process. Okay. In fact, we are still one of the top pillars, first pillar or second pillar of the corporate governance mechanism. Okay. Both in service and in practice. Members in service and in practice stand as pillars, ensuring that proper governance is there, proper internal control systems are there, proper risk assessment is there, so that our shareholders' funds are protected. That is the goal, nothing else. Where the NFRA has initiated investigation, no other institute or body shall initiate or continue proceedings on this matter. Hands off. Okay. So now NFRA is a quasi-judicial body, QJB. I don't know if you've heard of this term, quasi-judicial. You've seen many quasi-judicial bodies. Maybe, I don't know. In your syllabus, what is there? I don't see. Maybe final. Competition Commission, quasi-judicial body. Okay, SEBI itself is a quasi-judicial body. NCLT is a quasi-judicial body. What we mean is, see, there are civil courts. Okay. In fact, in the first chapter in this, maybe intermediate, no. In foundation, you would have studied what is the framework. So you have courts. Okay. So you have the Supreme Court and the High Courts, then you have the civil magistrates, the metropolitan and the first class magistrates. This whole framework is there. These are called courts. They come under the definition of court. And they are governed by a code called Civil Procedure Code. It's called Code of Civil Procedure 1908. The Criminal Procedure Code, they have changed some name they have given. I'm not able to remember it in Hindi, but I still call it Criminal Procedure Code. So here, this is called Code of Civil Procedure 1908. Again, drafted by the great Macaulay, the same man who drafted Law of Indian Evidence Act, the same man who drafted Indian Contract Act, also drafted the Code of Civil Procedure 1908, which is still there since pre-independence law. Our courts still function based on CPC. Though it's called the Code of Civil Procedure, it's known as, that's why I called it CPC, Code of Civil Procedure Code 1908, CPC. CPC, CRPC, Criminal Procedure Code, Civil Procedure Code. Civil Procedure Code means criminal procedure is where there is a crime, where something has been committed against society at large, like murder, theft, or any economic offense, smuggling, anything. It's a crime. It will be governed by CRPC, read with the Indian Penal Code. Whereas civil disputes, you want to file a plaint against somebody, you want to defend yourself, you want to file an interlocutory application, you want to file a miscellaneous petition. These are all standard applications before civil courts. These are done in accordance with the CPC, the Civil Procedure Code. Okay, suffice it to say. Now the point is, quasi-judicial bodies are not civil courts. They are not a court, but they have the same powers as are vested in a civil court under the CPC while trying a suit for a limited purpose in respect of the following matters. So, normally a civil court will have these powers, but a quasi-judicial body sitting in a quasi-judicial function like hearing a case of a poor chartered accountant for disciplinary proceeding, etc., will have the same powers as a civil court with regard to discovery and production of books of account. See, discovery is a very powerful thing. That is, in court, what happens now? You are the plaintiff, right? You are relying on many papers and documents now. Are you able to understand? You are relying on many papers and documents. Now, you have to make a paper book and you have to file it with the court, not in one copy, 3 copies. And 1 copy will be given to me as the defendant. I can go through it fully. Okay. And I can take time for that. And then, because I have to see, what are you relying on? What are the documents? I have to see. It will be put to me. Then only I can give my rejoinder. I can say, what are my documents? That will be given to you. So this process of mutual disclosure of documentation and evidence is called discovery. It's a very important aspect of jurisprudence. See, if you are going to rely on some paper, you can't hide it from me. That paper, you are saying I signed a paper. No, give it to me. The original. Original will be safely with the court. Copy should be served on me. I should be given enough chance to prove handwriting. I should be enough chance to hire a signature handwriting expert, say whether this is my signature or not. All that. So this is called discovery and production of books of account and other documents. Also, suppose you are relying on any documents, it can be produced, okay, etc., etc. So the court has the power to insist on discovery and production of books. Summoning and enforcing of the attendance of persons and examining them on oath. They can call anybody to come and give evidence. See, I'll come back to one more point. Inspection of any books, registers, and other documents of any person referred to in Clause B. Inspection of any books. They can send somebody to inspect. Issuing commissions for examination of witnesses or documents. See, you are a quasi-judicial body. You cannot walk, you cannot run. Well, it's an artificial person now. So either the witness has to come and appear before the QJB. Suppose the witness is old, sick, they are unable to move, but they can talk. Then The court will engage a professional called commissioner of oaths, a young advocate who will be asked to go and take the oath. So he will go to the hospital or house, he will administer the oath. What I'm saying is the truth, nothing but the truth. And then he'll be given a list of questions to be asked. That's all. He can't ask his own questions. He will ask all of them, note down the answers, prepare a sheet, certify it, get signature from the witness. He will also sign it, given in my presence. And that deposition, it is called. That deposition will be filed as part of the evidence. So this is called issuing of commissions or something. For example, my son is an advocate. He was appearing before some magistrate court where the magistrate needed somebody to go and measure some land and come. So they need a commissioner of oath. So my son was appointed. So on an appointed day, both the defendant and plaintiff will come. My son will go with them, go to the land. Then the measurement, the engineer's registered value will come. They will measure. Then my son will note it and certify it. And they will come and give it to the court. Now, why I am giving this example? All this can be done by the NFRA. NFRA has the same powers. I'll tell you one thing. This particular slide, if you are able to remember, across the board, whatever subject you are studying, later on in final also, FEMA Appellate Tribunal, same power. SEBI, same power. Securities Appellate Tribunal, same power. Competition Commission, same power. This particular thing is common for all. Any quasi-judicial body, including, just for your information, an income tax officer or an assistant commissioner or a deputy commissioner hearing a case under section 143 or section 147 in a very limited way is a quasi-judicial body. He has all these powers. Now, see, it's a double-edged sword. The minute you say that is a quasi-judicial body, then the quasi-judicial body is bound by the principles of natural justice. They are not bound by CPC beyond this. Only for these four matters, CPC will be applicable. Otherwise, CPC is not applicable to QJB. But the principles of natural justice squarely apply to QJB. What is one of the important principles of natural justice? Try to remember it, because as a future practicing CA or even in service, if you're handling indirect tax matters, GST, etc., only GST, customs, whatever, remember, when you're appearing before a assistant commissioner or superintendent or valuer or whatever of the customs or whatever, remember, he is a quasi-judicial authority. And as such, he is bound by the principles of natural justice. Somewhere in your submission, if you put, don't say you are a quasi-judicial authority and all. Don't. That is given. It is a given. You can simply say the assessee hereby begs to submit that he may be given a reasonable opportunity for producing the books of producing the paper, etc. Reasonable opportunity. That's it. That's like a karate cut. Immediately what reasonable opportunity? Okay. Because the minute he doesn't give reasonable opportunity, suppose you asked for a reasonable opportunity and you wanted 25th of June. He said, no, bring it day after tomorrow. You take it in writing. You can't produce it. He will pass an order now. But we can go to court, and on that ground itself, I can defeat it and I can get it remanded back. Because the court will simply say, hey, this guy asked you for a reasonable time. You are a quasi-judicial body. You didn't give him the time now. So, like that. I mean, these are all small tricks and trade that I'm telling you. Keep it in mind. If you think it's useful, it would be useful. Okay. In the nick of time, you can use it. You can get some time. That's nothing else. For you to come back and prepare and produce the result. Get it and go and whatever. Right. Where the professional or other misconduct is proved, NFRA shall have the power to make order for, suppose it's a partner of individual, sole proprietary, 1 lakh into 5 or up to 5 times the fees received. 5x fees means 5 times the fees received. In case of firms, 5 lakhs or 10 times the fees received. This is the penalty. Debarring the member also is possible. Debarring the member from being appointed as auditor, internal auditor, or valuer for a minimum period of 6 months to a maximum period of 10 years. To my knowledge, Satyam partner was the enterprise order was debarred. Though the firm wasn't debarred, they were debarred. In fact, in Indian Bank case, I remember about 13 firms were debarred from signing bank balance sheets. That was before NFRA era. Before NFRA era. Okay. Now, see, I'm so happy that NFRA is there, etc., etc. But occasionally we have to remind ourselves that we are living in a democratic country. So, and in a democratic country, I always have the support of a judicial frame. Yeah, this is something, as a teacher of law, it's my duty to make you appreciate and understand the power of a judicial framework. See, while the instrumentality of the state, while the ministry, while the employees and executives and officers of the ministry have extraordinary powers to do whatever they want, they are still circumscribed by the provisions of the Constitution of India. And the Constitution of India provides a judicial remedy. Okay, there can be no action of the state for which there can be no appellate remedy. If suppose there is any provision, any law which has not provided for appellate remedy, then I can go for a writ jurisdiction. That is when the writ jurisdiction starts. When there is no appellate remedy, when the law is harsh, when the government has taken adverse decision which is affecting me or my fundamental rights or substantial group of people, then I have to go for writ. But within the framework, any appellate remedy is there, I have to explore that. Here they provide appellate remedy within the framework of NFRA itself. Suppose NFRA has passed an order, then you can go against that to the NCLT, the NCLAT, the NCLAT. The reason is NFRA and NCLT are at par. So an order passed by NFRA is as good as NCLT order, or similar order. So go directly to NCLAT. And if the appellate authority also you're not happy, then you go to Supreme Court, blah, blah, whatever. Life goes on. A lot of lawyers will learn, okay, and such things like that. And that's a specialization by itself. Right. Now, so all this tough provisions, all this thing, to whom does it apply? It applies to certain types of categories of company only. Obviously, listed companies. Listed companies are covered. Unlisted companies are also covered, only unlisted public company. Private companies are not covered. They are, because the reason is they are too small. See, for NFRA to get itself interested in this type of things, there should be a substantial prejudice. Otherwise, NFRA will not get itself linked. Correct? Right. So, unlisted public companies having paid up capital greater than or equal to 500 crore, turnover greater than or equal to 1,000 crores. It's a tall order. 1,000 crore turnover, you will find very few companies. I mean, not many companies will reach 1,000 crore. Listed companies would have reached. Unlisted 1,000 crore company, rare. See, we have one client who is a 1,000 crore company. It is not even a company. It's just recently, about 4 years ago, we made it into a company. It was a firm, a 45-year-old firm. After a lot of consulting, after a lot of suggestion, corporatization, we have now converted it. Under Chapter 22 of the Companies Act, about 4 years ago, it got converted into a company. They have reached the turnover 1,000 crores. Possibly go for an IPO. Now the point is 1,000 crore turnover of 1,000 crores. And outstanding loans, debentures and deposits greater than or equal to 500 crore. All this you should see on 31st March in the previous financial year. PFY. P means previous. That is before. So, if question whether to go for NFRA or whether your NFRA is applicable to you, then I have to see the 31st March ka balance sheet. On 31st March, was your turnover 1,000 crore or above? Was your paid up capital 500 crore or above? PUC means paid up capital 500 crore or above. Outstanding loans, debentures and deposits, any one thing. Altogether, 500 crore. Loans, debentures, deposits. 500 crore. Any one of this. Okay? Any one. There is no and. It is either or. Either PUC greater than or equal to, or turnover greater than or equal to, or outstanding loans greater than or equal. So even if you trigger one condition, suppose that your paid up capital is only 100 crore, loans and deposits are hardly 200 crore, but your turnover is 2,000 crores, 1,200 crores. NFRA, buy. You're a public company, unlisted. NFRA, buy. Okay. Even if your turnover is less than 1,000 crore, Baba, if you're listed, gone, buy. Only NFRA. Okay. See, NFRA company has nothing to worry. NFRA will do nothing to the company. For that, there is another body. Don't worry. When you come to final, you will study. When you come to investigation, inspection, investigation, there you will see Serious Fraud Investigation Office, SFIO. So for the management of companies, SFIO is there. For the erring auditors, NFRA. Okay. Insurance companies, banking companies, companies engaged in the generation or supply of electricity. See, only B, there is a monetary ceiling. A, C, D, E, just if they satisfy the requirement, they are out. Whatever may be the turnover, etc. Listed company, insurance company, bodies, corporate or companies referred by central government to NFRA in public interest. Central government decides. These fellows, you go and check up. See, if done proactively, this will be a very good idea. For example, CG can decide all companies promoting cryptocurrency, verify. What are they doing? What is the business model? Are they really having cryptocurrency or is it a Ponzi scheme? Okay. Now that will be something great service to the human being. Okay. And if any auditors are colluding and helping, finish them. Because cryptocurrency could be the next scam. Many innocent people, innocent people very well know it is fraud. They go and give money. How can they be innocent? So the greed is driving them. So all these cryptocurrencies, they can now say they can refer. Now itself they can do. NFRA can start taking action now itself. Why wait for the cryptocurrencies to take more money, suddenly collapse, and then everybody loses money, is out on the road. Then NFRA will get come and they will say, "We have to wait. Don't wait." Now itself, in front of our eyes, a scam is being created. Bodies corporate registered outside India, which are subsidiary or associate of A to D, subject to certain conditions. What they are in the next slide, we'll see. So, normally, Indian authorities cannot have extraterritorial jurisdiction. Normally, NFRA being an Indian government cannot have jurisdiction over a body corporate registered outside India. But in this case, they have said, if you are a subsidiary or associate of any of these fellows, they'll get the right. So through that, they'll come. Okay. Subsidiary or associate. Associate means I'm not holding more than 51%. I'm holding 20% or 20% or above. Then that fellow becomes an associate company. You know that. For CFS also you studied now. That associate also has to be consolidated. Okay. So A to D, A, B, C, D, any one of these, if they have a subsidiary abroad or an associate abroad, that gentleman, that company also will come here. But subject to condition. What is that? Companies in respect of which NFRA may. See, we said now body corporate registered outside India. Na? We said now body corporate registered outside India. Now, not all. You can't just like that go and take. First of all, you should be a subsidiary or associate. So, this body corporate registered outside India should be a subsidiary or associate of A to D. Got it? First condition. Second, very important. This is the condition. We saw here, na, subject to certain condition. This is the condition. What is the condition? Income or net worth of such subsidiary or associate exceeds 20% of consolidated income or consolidated net worth of such company or the body corporate. Either income or net worth. See, let us think about it this way. The income of this company is 80 crore. Okay. This body corporate outside, registered outside India, 15 crore in Indian currency. INR itself is mentioned. Total 95, right? Now, out of that 95, does this 15 crore constitute 20%? So how I will calculate 15 divided by 95 into 100. I am getting for this calculation 15 by 95. How I get 95? 80 plus 15 total consolidated income. So the consolidated income is 95. Out of that, the subsidiary income is 15. So as a percentage of 95, it is 15.780, you can say. It should be less than 20. Therefore, not applicable. Suppose it is 25. Automatically, this will become 75. Then automatically 100, na? This becomes 100, na? This becomes 100, na? So if this is 75, and this is 25, 100, na? In 100, what happens? Straight away 25%, na? Greater than 20, na? So this body corporate that registered outside India, which is a subsidiary, will also come under NFRA. Okay. Hope this is clear. What I will do, at this stage, I will look at the questions that you might have. Is NFRA almost getting over? Okay. It's all pure theory only after this. So we have I will do it. Soumya ji, I will do it. I will upload, not download. Upload. You will download. I will upload the chapter. Dividend and accounts and audit also. I will do. Don't worry. The section does not talk about joint venture here. If you want, I can check up once more. You also check up in institute material. To my knowledge, it doesn't talk about joint venture, only associate and subsidiary. Okay, to answer your question, Anubhavji, only subsidiary and associate. Okay? Joint venture, no. I'm sure. Tribunal will take care everything, right? I don't understand what by that. Who's going to make standards there? Sir, standards are still formulated with, there is an elaborate board now. You have the accounting standard board now. ICAI has an IASB now. NASB, National. See, NFRA will also set up an NASB, National Accounting Standards Board. And that board only will frame the standards. Obviously, that board will have chartered accountants only. Maybe some people from MCA could be there who are having some knowledge, etc. But, sir, again and again, sir, this is a very, very esoteric and philosophical point. If you want to judge a doctor, you have to be a doctor. I mean, or else you let me go, yeah. See, I am treating him. I have got medical experience. You don't have medical experience. So you want to say, you want to judge me, then you do it. You cure him, yeah. You conduct the operation. Now, I will see it. I will look at what you're doing. You do the operation. I have done the audit. I am trained to do it. I've got experience in doing it. Right. If you feel that I have done something negligent, go through my documentation. But are you competent to see my documentation? I'll give you the documentation. I have no problem. Nothing, no chance for it. Take it. But can you see it? To be able to see it, have you gone through the rigorous curriculum of the Institute of Chartered Accountants of India? Have you cleared the exams? Then please, you're entitled. Come and see. You're a peer. You are my co-professional. Come and see. I will give it to you. Because chances are you will understand it. Even in that, there is a difference between experience. That's okay. Documentation is documentation. Whether it's a 90-year-old professional or a 19-year-old professional, I presume now. So a 23-year-old professional, then 21-year-old professional, the rule is the rule. The auditing standard is the same. The IAS is the same. Compliance is the same. Please check. Even a 21-year-old member of my institute can come and verify my work. But a non-member, how he can verify my work? Is something, as a member, I'm asking. Maybe I'm wrong. Maybe I'm foolish. Then anybody let rickshawala come and verify what I'm doing. Yeah? Why me? Just because he's sitting, he can do whatever. He can verify what I'm doing. So, I mean, this is my view. Yeah. Of course, the view expressed by a senior practitioner. Okay. Maybe very vocally, which is not so vocal for others. So, okay. Yeah. Appellate third is also a quasi-judicial body, 100%. NCLAT is very much a quasi-judicial body. It's you check up NCLAT sections in the Companies Act, which is not in your syllabus. NCLAT is also quasi. All of them are quasi-judicial bodies, madam. All of them. NCLT, NCLAT, see, SEBI. If they are sitting in judgment, if they are verifying records, they are inspecting. If they have been given power to decide whether a person has committed an offense under any law or not, straight away they are quasi-judicial body. See, under FEMA, there are adjudicating authorities. Under FEMA, they are quasi-judicial body. Quasi, it's a good point. Quasi means, you heard of quasi-contract, no? Quasi-contract. In Contract Act, it was studied in foundation. Quasi. Quasi means like, but not the same. It is like, but not the same. Quasi-contract means it is like a contract, but not a contract. Like, but not the same as. Okay. But similar. Okay. It has the same similarity, not the same. It looks like it, but not the same. So quasi-judicial bodies are looking like court, but they are not court. They have certain powers of court, but all the powers and procedures are not there. For example, court can recognize contempt of itself. QJB cannot recognize contempt of itself. How that is that? So many differences are there. QJB and court are different, but QJB is similar to court. So it's called quasi-judicial body. It's not a judicial body. It is a quasi-judicial. Okay. I am afraid to use the word pseudo. Pseudo means false. Whereas this is not false. This is similar, but not the same. Okay. QJB, quasi-judicial body. Next time you can check out. See, if you're not going to be in practice, or if you're not going to be in compliance area, or that area, then all this may not be very relevant to you. But if at all in any company, you are going to be in charge for legal compliance, financial compliance, taxation, as CFO, or as a VP taxation, whatever advisory, then you have to be thorough with law. Thorough with law. The legal principles, legal provisions should be thorough. Okay, you cannot skip law. Because once I was sitting as a judge for a faculty development program where faculty have to make presentations before us. So I was sitting for company law. Whereas one person gave a presentation in income tax. Then I was just joking and said, look at this. I thought it was for company law and corporate laws. You're giving IT presentation. No. He said, I thought it was law subject. And Mr. Srikanth, you may please note, income tax is also a law. That hit me. I said, yes, you're right. Every principle of law that I learned, I can as well apply to the so-called Income Tax Act. It's not that, yes, Income Tax Act is a specialized enactment dealing with direct taxes. But it is a law. Many of the principles of law that you will learn here will apply. For example, the General Classes Act applies to Income Tax Act also. Okay, interpretation applies to Income Tax Act. This also, and so on and so forth. Okay, so if some of you have aspirations to become authority in income tax practitioner, which is good. Today, believe me, core tax practice is superbly active. It is not outmoded, it is not outdated. With all the simplification of the taxing statute, we are only getting more work, not less work. More complications, more litigation, more confusion, more advisory services. Everything is more thanks to the simplification by the government of the tax structure. In fact, the new tax code is released by the government of India, we will be the happiest people in the world. Because for another 7 years, 100% we are going to get work. Practice me. Huge work, consulting, explaining, verifying, advising clients on the new tax code. And the new tax code will definitely have flaws. So appeals. Bonanza. We are just eagerly waiting for the new tax code to be announced and made law. We can easily relearn it. Not a big deal at all. Okay. See, after all, we learned the Companies Act again. So what's so difficult in learning the direct tax code? Principle wise, it's the same. Now only sections will differ. It's okay. Just telling this to you. We are more than happy for the new direct tax code. The more they meddle with it, the better we are. More happy we are. So, recommending accounting standards and auditing standards for the purpose of recommending accounting standards or standards of auditing for approval by the central government, the NFRA shall receive recommendations from the ICAI on proposals for new AS or SA or for amendments to existing AS or SA. See, as you know, in India, we have a two-tier framework for accounting standards. So there are the upper tier companies which are governed by Ind AS and the lower tier which is governed by the normal accounting standards. Okay. The Ind AS which are applicable to listed companies, certain categories of unlisted companies, etc. Upper echelon, where you will find the Ind AS is applicable, which is IFRS clone. Whereas below that upper layer, if you come to the lower layers, accounting standard is applicable. The good old accounting standard, 29 accounting standards. Do whatever you want. Okay. Whatever it is, the ICAI will give the proposal. It will be reviewed by the NASP, and then the NFRA will announce it. Will recommend to the CG, and the CG will approve and announce it. Okay. In case they have any clarification, they will seek additional information from the ICAI on the recommendations if required. If a company or any officer or an auditor or any other person contravenes any of the NFRA rules, the company and every officer who is in default or such other person shall be punishable as per section 450 of the Act. See, 450 is not in your syllabus. Basically, 450 is where there is no specific penalty for punishment, then 450 is applicable. Where no penalty is prescribed in any section, 450 is perfect. So if there is anything, any duty to be performed under the Companies Act, or anything is prohibited by the Companies Act and you're doing it, no penalty has been prescribed. You cannot say, no penalty, I'm escaping. No, 450 will apply. Where common penalty, company and every officer should pay fine up to 10,000 rupees. With a continuing offence, then 1,000 rupees for every day after the first during which the contravention continues. So here, any non-compliance with NFRA, they're saying go under 450. Go. Okay. 450 is interesting, not in your syllabus, but try to remember. Try to remember. The NFRA shall meet at such times and places, etc., etc. So a secretary will also be appointed and other employees. It will have a huge structure. NFRA. See, the NFRA cannot work in vacuum. The NFRA will only issue directives. They have to be implemented. People, they need executives. They need IAS officers. And those IAS officers need superintendents, clerks, Group Ds. A whole battalion of government servants will be there to support the NFRA. Okay. For the efficient performance of functions by the NFRA under this Act and the terms and conditions, etc. Of course, this whole administrative setup will be headed by the secretary. So the secretary will sit in the board. He will be attending on the board, the NFRA. So whenever the NFRA meets, the secretary will call for the meeting. He will arrange everything. Then whatever his decision is taken, implementation, again, these employees will do. Okay. So the head office of the NFRA shall be at New Delhi, and the NFRA may meet at such other places as it deems fit. And do you remember what we did for IEPF? Same. The NFRA also should maintain accounts, and the accounts of the NFRA will be audited by the CAG, and audited accounts with the audit reports thereon will be forwarded to the by the NFRA to the central government, and then the NFRA will prepare an annual report. Just compare this with the IEPF. Same. Okay. Giving full account of its activities, obviously how many chartered accountants are debarred, how many were put in prison, how much penalty was levied on chartered accountants, all the records will be provided. The report shall be forwarded to central government. And the said report, together with the audited accounts of the NFRA and the CAG's audit report thereon, shall be placed by the central government before both the houses of parliament. Friends, we have already gone through this in IEPF. Why both the houses of parliament? Believe me, on the day when this report is presented before both the houses of parliament, people will be sleeping. I'm not joking. It may low attendance. Yes, NFRA report over. Okay, NFRA is a report presented and approved and adopted and approved. That the speaker will say, some people will raise. That's it over NFRA. But once it is placed before both the houses of parliament, it becomes a public record. Every citizen of the country has access to the report. Okay. I mean, these are all, you might say, for you, it may not seem important, but for me, they are the essence why I'm an Indian, why I live in this great country, and why I would never ever live in, say, Afghanistan or Pakistan is because these fundamental rights are protected by my judiciary, and my executive has to be transparent. No decision can be taken by the government of India which is not known to every citizen of this country. Nothing is secret. No militia. No dictator can sit and decide in his room and not tell me why he is doing it. Every action of the government of India should have reason supporting it. And the reason should be valid. If not, any citizen has the right to go to the High Court or Supreme Court, as the case may be, on a writ where my fundamental rights as a citizen are violated, I can go. Similarly, every decision, every report will be placed before the House of Parliament. Who are the House? What is the House of What is Parliament? The place where the members of the representatives of the people meet. Every one of those members of Parliament is a representative of a parliamentary constituency. He represents the people of this country. And through him, the people are informed. And once the people are informed, any person has the right to file. You might think that this sounds very emotional, but this is democracy. If this is denied, even a small iota of this, of course, this is supported by a very free press, which is allowed to freely report proceedings of and freely comment on the decisions of the government. See, if a majority in parliament decide, we are all bound. There I cannot fight. If a law is passed in parliament, I have to obey it. But I can comment about that law. I can give my views about that law. I can say this law will have this effect. That cannot be, you cannot make such comments. You cannot say, it's a democratic country. You pass the law, it's not applicable to me. But while complying with the law, I can comment about it. Okay, every one of us has got the right to do it. Okay. So this is the NFRA. Now we have finished 132. So let me see if you have any more chat questions. No, there is no chat question. The NFRA shall prepare in such form and at such, we already seen that. 132 over, okay. 132 over, Kadam ho gaya. Now we move on to a very short and sweet section called 133, which is nothing but your accounting standard. Central government prescribes accounting standards. Wow. So they are, see, when this section was passed in 2013, they were not sure about NFRA. They were sure about having NFRA, but whether NFRA will be constituted, because government acts very slowly, see, no governmental department can act fast. They have to go very slowly. They have their own pace, their own speed. If you want to make them go fast, that is different. You can. But normally, the pace at which they go, like slow. Like Oliver Ridley Turtle, they'll be moving slowly. Kurma. But if you want to make him go faster, that is different. So they were not very clear whether this will happen. But so they put a clause that if NFRA is constituted, then recommendation by ICAI and such recommendation examined by NFRA, which is how it is today. In case NFRA is not constituted, then recommendation by ICAI, and they had something called NACAS, National Advisory Committee on Accounting Standards, NACAS. So then they had NASB, then NACAS. So NACAS will decide. Now NACAS role is taken over by NFRA, and in those days I used to read some of these comics and all where where the evil authority, they'll have abbreviated names someday. None of these bodies, James Bond will be fighting against a body which will be abbreviated body. Like that, this NACAS, NFRA and all sound like that. Okay. I mean, just a comment, don't take me seriously. Okay. So, yeah. Now we move on, as Madam Shraddhaji rightly pointed out, we are moving to a very, very important aspect of company law, really from knowledge point of view. In fact, from knowledge point of view, I am alerting you to NFRA. Okay, NFRA, be worried. If you are going to be in practice, large practitioner, going to have 3 listed companies signing balance sheet, no, be careful. Because you are directly going to come under the scrutiny of NFRA. Okay, be very, very careful. Be careful means what? Yeah, you should see to it that you're complying with the accounting standards, auditing standards. Not only should you comply, your compliance should also be documented. Samajh gaya na? See, it's not just about compliance. Everybody, I'm complying, you're complying. But tomorrow, if NFRA is sitting on your neck, can you prove that you verified? Got your documentation. That is important. Have your employees documented it? How did you form the opinion? See, I worked in Price Waterhouse, not PwC, the original Price Waterhouse. I worked from 1988, almost 88, 88 to 91, almost 3 years I worked, and 87 November to 91 March. This was my duration. The flip and old PWH Price Waterhouse in the Chennai branch. Chennai, one of the glorious 3 years of my life. Yeah, as a young professional, just 22 years old, qualified CA, 22 years old, joined Price Waterhouse. My learning started. I really learned 3 years, glorious years, where I learned completely documentation. That is documentation. PW is documentation. Everything is documented. Tomorrow, if suppose I have done the audit now, I'm not there. I quit Price Waterhouse, I moved away now. The next guy who comes to take over the audit from me, he doesn't have to talk to me. I will talk to him through the audit working paper. I will report everything, every bit of evidence that I saw, every opinion that I formed, my conclusions, it will be written. Of course, in those days, it was manual working papers. Now it is online. Now we are using online working papers. We are using digitized systems, whatever it is. As a professional, my application of mind and my conclusions and what I've seen will be recorded so that anybody following my footsteps can simply know what I did. Maybe he can do the same thing or he can do something else, document that. So wherever I found something which was different and I wanted to document it, I documented it. I said, this is how it should be, but this is how it is here. There is a mistake. Then all that will be collected, and for each the senior audit manager in charge of the audit, he will collect all our queries. So we'll all prepare top sheets for each of the heads now, debtor, creditors, fixed assets, cash. We'll have top sheet. Then those top sheets will be compiled and those top sheets will be presented to the partner for review. He will go through everything, but mainly he'll see the top sheet and go through the working pattern. And sometimes you'll be called for a review and he will ask specific question. What did you see? Have you seen that? How? How you can report like this? Go and verify that and report that also. So we have to go back to the client, which is why we will be 100% careful that we have verified everything. If I have a doubt, give that paper. So that if the partner, many times, the partner asks, Mr. Srikanth, have you seen that? Yes, sir, I have seen. Have you written? Why you have not written? Write it. See, are you able to understand? You have seen that and write it. So that anybody following after you should know. You see, including number of that date, reference, everything you write. Okay. So why I'm giving this background to you, if audits are conducted with that type of sincerity and, clarity, we need not be afraid of NFRA. Okay. Because after all, NFRA is not some tiger. It's just human beings. If you produce the documentation and say, see, I verified, you're safe. Okay. Chances are, if you have done such a good audit, a fraudulent company will never be able to escape your audit. They will end up falling at your feet. You will say, I won't collude with you. You will qualify the report and go. That's it. You are safe. Nobody can blame you on that. Maybe they will remove you. It's okay. What is there? Let them remove. But your ethics is more important. So sorry if I'm wasting your time. But see, before NFRA, NACAS was the body that reviewed the accounting standard on behalf of ministry. So they, just like now NFRA is examined, in those before NFRA, the ICAI will make the accounting standard, go through the whole process. Members will give their views. Then our own ICAI accounting standard board will verify. Then Central Council will approve, come for recommendation. Then it will be given to the NACAS. NACAS will go through it. Expert body, they'll go through it. Then once NACAS is convinced everything is fine, they will give it to the central government, which will announce it earlier. Now, once NFRA has come, instead of NACAS, it will be done by NFRA. Okay? Good show. Friends, I have a small suggestion. I can speak even for 4 hours, 5 hours, 6 hours, I can speak. I have no problem, but you have to listen. So, my humble suggestion, let's have a small break. Okay, say for 5 to 10 minutes. Now, let's say 9. Now it's 7:30, maximum 7:40, maximum per limit. Okay. When we will take up CSR. Sir, small break, sir. Yeah. We have a nice, interesting question from Mr. Anil Golti, which is nice. See, he asked the question: is NACA still working? Sure. Now, actually, curiously, NACAS is still alive and kicking because NFRA is not fully equipped for this. So, the institute is still going through NACAS. So, the institute is recommending to NACAS, which is NACAS is still very much active. When will they be asked to go? It will take till NFRA is fully equipped. NACAS, National Advisory Committee on Accounting Standard, is still working, even though the NFRA was established in 2013 to replace it. The NACAS was reconstituted in 2014. Reconstituted. The old NACAS was there under the old law. Now it has been reconstituted under the new law to continue its work until the NFRA is fully operational. The ICAI, which develops accounting standards, recommends them to NACAS, which in turn advises the Ministry of Corporate Affairs. Okay. So I hope Mr. Anil got his answer, and we also got the answer. But it's a very, very temporary life for NACAS. NFRA is the body. Okay. So that is the thing. Thanks very much to Anil for giving this question. That is how the knowledge improves. So all of us have learned today. Okay. See, actually, I didn't know this. Honestly, I didn't know it. I was thinking that NFRA, the great God, its ultimate God has come. So Nakas is still there. Okay. Nakas is still there. So I got this from Google. Karlo Dunia Butti me. Everything is answered by. In fact, seriously, nowadays, I don't really feel like asking questions to anybody, except, very esoteric questions when I go to my Guruji. And even there, much of it is answered in Viveka Chudamani by Adi Shankara. If properly Viveka Chudamani is read from top to bottom, the existential questions are answered there. From where I have come, who am I, what is this body, mind, how did life come? Everything is answered. Okay. Most of the questions are answered, except that we don't know where to find the answers. That's all. So the intelligent person is not one who knows everything, but rather who knows where to go and find it. Okay. This is the reality of today's world. The man who knows everything, you can't, because Google knows much, much more than the man who knows everything. So don't try to be the man or lady who knows everything. Rather, be the man or lady who knows right questions and who knows where to go and ask it. Okay. This is just an offhand reaction to this. Madam, alag-alag, sir, Anilji, totally alag-alag. National Company Law Tribunal and the National Company Law Appellate Tribunal are judicial bodies within the framework of the company law. Suppose you are not happy with any order passed by the Ministry of Corporate Affairs, then there are many sections where NCLT has powers of judicial review. So NCLT, when you don't say tribunal, there are two guys, the National Company Law Tribunal and the National Company Law Appellate Tribunal. So these are judicial, quasi-judicial bodies within the judicial framework of the Companies Act. Okay, NFRA is a specific body. It is not only for monitoring the accounting profession, the other two professions, and for prescribing accounting standard, prescribing auditing standard, taking disciplinary action. Very specific. Technically, NFRA, see, in terms of hierarchy, NFRA will be at par with NCLT is what I said. So if NFRA has passed an order, against that order, to whom will you go? You have to go to some judicial body now. So within the Companies Act, you have NCLT and NCLAT. If NFRA is passing an order, against that order, where you will go? You won't go to tribunal because they are equal bodies, peers. So you go to NCLAT, National Company Law Appellate Tribunal. So technically, it will look like this. Let's see if I can write on this. See, it's like this. NCLT है, NFRA भी है. Okay, अलग-अलग है. Now, many sections refer to NCLT. NCLT has power even under the insolvency and bankruptcy code. This fellow has power. NCLT is part and parcel of the Ministry of Corporate Affairs judicial framework. So the regional directors and the ministry cannot take action on its own because they're executive body. So whenever they are taking any decision which will affect me as a citizen, then it has to come through the NCLT. They also have to go to the NCLT. I also have to go to the NCLT. So NCLT is like a quasi-judicial body here. Suppose I'm not happy with the order of the NCLT, the appellate tribunal is there, NCLAT. Now, NFRA had totally different. They are here to punish ICAI for its Purvajanma Pavam, Praraddham, everything, Sanjitam, everything, all the Pavam, Janma Janmantra Pavam we have committed, NFRA has to punish us. He is in that role, Karma Karaka. So now that fellow will pass an order on me. No, I'm a citizen of this country. I can go on appeal. Where will I go on appeal? I'll go here. Not to this guy. Okay, because these two guys are same level. So I will go for, again, I'm not happy with NFRA order, then I can go and appeal to the NCLAT. Okay. So I hope, Ji, you are clarified on this also. NCLAT is having appellate power, appellate jurisdiction. Against the orders of the NCLT, you go. Against NFRA also, you go to NCLAT. Okay. Superior body. And against NCLAT, you will go to Supreme Court. Straight. Against NCLAT, Supreme Court. In fact, this is a beautiful specialization area. Chartered accountants and practice in all these. Supreme Court, you can't go, obviously. You have to be an advocate. But NCLT and NCLAT, member of the Institute of Chartered Accountants of India, can argue. You can appear and argue. If you become that was one of my aspirations when I was about 35 years old to become a specialist in company law. I even wrote a book. I was a good teacher of company law, etc. Yeah. I also became a corporate trainer, HR. So how many horses can I ride? So I said goodbye to just continue to be a good teacher of company law and a good practitioner in CA practice and corporate trainer and HR. I just rode 2 horses. Third horse, I don't know. Also practicing in NCLT, NCLAT, becoming a member of NCLT and all was a dream. But sorry, that did not happen. Maybe in some other universe, in this multiverse, I did that. Not in this universe. In this universe, no. Okay. Good. The multiverse is the infinite possibilities, becomes every universe, you create one possibility of your life. And the whole infinite probabilities within possibilities become the multiverse. Fantastic, sir. NFRA evaluates ICAI frames and CG prescripts. Exactly, you have got it. The NFRA evaluates the ICAI thing, then it recommends to it sends it to the CG, then the CG prescribes. You got it straight. Thanks for the clarity, Anil. So the roles are very clear. ICAI is the brain. We develop, we give everything. Then we produce it before NFRA. NFRA, okay. Now it is Nakas. Pito, it's Nakas. Not NFRA. Abhi, it's Nakas. That also clarity. Then, okay, go. Then send it to the CG, and the CG will recommend. As you rightly say, it would prescribe. Okay. Now we come to the very interesting and very important concept, which is called CSR, Corporate Social Responsibility. See, we can go in depth into this. Like if I can speak on CSR, what I'm going to do is I'm going to adhere to the framework more from exam perspective. But a little bit, I'll give you the background. What is corporate social responsibility? It's different from corporate governance. Corporate governance is the responsibility that a company has to its stakeholders. So a company has to be transparent to everybody, provide information, not just the shareholders, but everybody, the employees, the workers, the government, the society around it. I'm sorry, for example, the local panchayat. So they have a need to be transparent, and to the bankers who lend money, to the depositors, to the debenture holders, you name it. These are all stakeholders, right? This is a duty to ensure that they are transparent and that their working is not a secret. Everybody has certain rights and their corporate governance. within that framework of corporate governance, you could say there is CSR. CSR is a giving back. See, I am a pure capitalist, just right of middle capitalist. I'm a liberal capitalist, right of middle. I'm not left of middle, I'm right of middle. So I'm not an extreme capitalist. Even as a right of middle uh, liberal capitalist, I feel that companies must make profits and maximize shareholder wealth. This is your job. Your job is not to do good to society. Your job is not to bring about peace and prosperity to this country. That is for government of India or for a non-governmental organization or a non-profit organization. Nevertheless, having made this bold statement, companies must make profits and maximize shareholder wealth. If you deviate from it, even as an auditor, I will not permit you. Boss, you are supposed to get the best deal. You are not here to do good. If it's a deal, it's a deal. He is a supplier, deal with him as a supplier. You don't have to be benefiting him. If he is a customer, give him the best quality at the right price in the right time. That's all. Make money. That's your goal. If you suffer from it, you are gone. Many times, I find startup entrepreneurs coming to me. They are not clear. They will say, Mr. Srikanth, I want to improve society, serve society. I said, go, join Chinmaya Mission, join Ramakrishna Mission. Why are you sitting here? No. I want to start a startup. But that will also be environmental. Come on. Either you do good to society, form an NPO, or you make money, form a startup. These cannot be, you cannot do both. Yeah, there are some examples of people, but even then I tell you it's very costly. But does it mean to say that a company has no duty to serve the community? This has changed from the early 45, 50s, post World War II. Slowly things have changed. And post 70s and 80s, corporate social responsibility has become an important topic. Okay. So now economists and the philosophers and thinkers have agreed. Though a company's duty is to make profits and maximize shareholder wealth, it has a duty to serve the community and society within which they exist, function, and derive the sustenance for their growth. If they fail to fulfill this duty, they will be no more than a cancer that destroys the very thing on which it feeds. So, somewhere there is a need to understand that though we make money from society, a little bit of it we have to give back in the form of some support. Okay, so CSR is a conceptual framework that analyzes the various ways in which the corporate community can pay back or return to society portion of the profits they derive from it. Portion. This usually takes the form of social welfare and other measures taken in and around the geographical area where the company operates. This seems to be a very important theme in most CSR narratives. Okay, the geographical area seems to be a very important theme in most CSR narratives. Whenever CSR is undertaken, it is preferably done with same thing. I'll tell you one beautiful CSR that a company does. I can name the company, Orient Cement. I visited them for conducting a team building workshop, a 2-day program. One of the first day lunch, the HR manager came to me and said, Srikanth, would you like to go around? Yeah, why not? I've seen so many, I've easily seen 25 cement factories. Cement process is not new to me, but it was a state-of-the-art plant. So he took me through the plant, completely automated, control panel driven, right from pouring of the limestone and other inputs, and then bauxite and all, and finally clinker, and from clinker to crushing, and crushing to packing, completely automated. We saw it, a lot of dust, but I could see a lot of greenery within the factory. Huge green plants, green trees, etc. I was very surprised. I said, what is this? They said, Srikanthji, we have to take limestone from the quarry. When we take limestone, it's an open cast mining. So it becomes a hole. There's a huge hole there. What our MD has done is we have got a CSR committee where we have used that hole to make an artificial lake. So whenever it rains, the water collects there. And that water is used to it is used to water these plants and trees. And these plants and trees mean, though it's a polluting cement plant, these trees regenerate it. And not only that, the dust which settles now, the water which is sprayed, the dust settles so that it doesn't flow in the air. So, see, technically it won't come under CSR. By the new definition of CSR, it won't come. Companies Act definition of CSR, what I described is not CSR. Why? Because you are only doing it within your own factory. But the benefit of what they are doing will be helping people in and around 7 kilometer radius because no dust. So reduced impact of even the employees. So reduced impact of lung cancer. Okay. See, people working in or near a cement plant or people living in or near a cement plant have higher risk of contracting lung cancer. So research has proved beyond doubt. Okay. Now, why I'm saying all this now? This is something that the companies can work on. You can do something. Okay. You can set up a cancer detection screening facility in the local areas so that early detection. Okay. Not only for your employees, for everybody. And possibly support, whatever. Free cancer hospital, whatever. I'm only giving examples. See, there are so many things that you can do in CSR. CSR, if rightly applied, can be an engine driving the economic and social upliftment of society. See, once I started practicing and I started earning money now, a lot of money I have earned. But I decided every year, 10% of my income will be set aside. And I formed a trust, Blue Dot Foundation. I contribute all this to my foundation. And from that money, we provide educational assistance to deserving students. So in a year, we take 4 or 5 deserving students and we educate them. So we pay their tuition fees. Like that, we have helped about 15 or 16 people over the last 4 years. Of 10 years, we've been running this. About 16 or 17 people, because in a year, we take 4 or 5 max and we pay. And we support them throughout, from first year engineering to last 4th year, till he gets a job. We select only people from the lowest of low poor families. Sometimes father is not there or both parents are uneducated, but the child is very brilliant. We supported a girl through medical school. Why I give this example? All of us can do CSR. It is not that only corporates have to do it. Even auditors and chartered accountants, we are earning money. That money is a little bit we can give back to society. And my philosophy is that I don't believe in feeding people or giving them freebies. No, I believe in educating. An educated person, 3 generations will improve. One child educated, one child getting into the mainstream society can uplift. 3 generations of that family will go up, and that's it. That family will become improved. So this is the only solution for problems. So it's been done. I'm giving this not to boast, but to tell you it is necessary. Yes, I want to make money, but if I do not give back, I'm like a cancer. Okay, eating but not giving back. Okay, so this is the basis of corporate social responsibility. Basically, they are saying certain categories of companies have to have a CSR plan. They have to formulate a CSR plan. This is all they say. Okay, this is based on net worth, turnover, or net profit. Okay, so every company, including its holding and subsidiary, and a foreign company having its branch office or project office in India, which fulfills the criteria. What are those criteria? We will see. Those criteria, if they are satisfied, compulsory CSR. See, Srikanth is giving 10% of his income, not because ICAI told him or Government of India told him, but because he wants to give voluntarily. This is called voluntary contribution. But the Government of India, with all its highly developed wisdom, has decided we will make it compulsory. Okay. So 135 said compulsory CSR. If you are of certain size, jolly well give. Compulsory. Okay, that is why it becomes a compliance issue. It's not just an emotional issue where I want to give back. See, Jamshedji Tata gave. A whole city became Jamshedpur. He created a whole Tata has done so much CSR before compulsory CSR. Okay, the entire Jamshedpur facility that you see it is part of a CSR of the Tata Group. The entire city, a whole city, they have done. Okay, and and Tata even said we also make steel. They said making steel is incidental, and they spent a lot on CSR, right? But now they made it compulsory. Okay, now we are going to see quickly what are the CSR activities. Quickly, okay, I don't want to waste too much time on this because it is not important from exam point of view. First, we will see what is not considered CSR. Activities undertaken in the normal course of business. That is why I said when the cement plant uses the water stored in the quarry to spray on the trees and all, to settle the dust and plants, to grow the plants, it is not CSR because they are doing it in the normal course of business. But one exception was during COVID time, only for these 3 years. Hello, brothers and sisters, it's all over. COVID over. Now, old normal. Old normal. Now, new normal. New normal. Okay. Change is the only permanent. Foolishly, we said that is the new normal. The word normal should never be used anymore. Okay. New or old, there is no normal. Okay. Only change. Be prepared for change every day. Okay. Before change comes to you, you change yourself. The only way to meet change is with change. When the world is changing, you change. Before the world changes, you become better to face that new world. The world will be very surprised. I thought we are changing. This guy will be surprised. This guy is coming 2 steps ahead and standing there when waiting for me to come. Change sometimes tells me, Srikant, I'm thinking I'm going to surprise you, but you are standing right there. You're waiting for me to come. Yeah, I know you're going to come this side only. I'm already here. Come. So predict the change and do something about it is the ultimate secret of success in 2025 AD. Okay, welcome to my VUCA world. Welcome to my changing world. Welcome to me and my changing world. Okay, if you are not going to change, then that's it. Okay. No. So why I say now COVID and all over, let's not even bother about it. Okay. Such research and development activities of the COVID, if you do, they're saying that alone we will allow a CSR and all that. Okay. Very important is activities undertaken in the normal course of the company, except COVID research by pharma company, not allowed. Any activity undertaken outside India, not allowed. CSR should be inside India, except training of an Indian sports personnel in a foreign country for representing state or union territory at national. Suppose you are sponsoring an archer or a rifle shooter, he has to be trained in US. They're sending him to US for training or Dubai for training. Then that is all. Because he's an Indian sports person. Okay. Contribution of any amount directly or indirectly to any political party is not CSR. Okay. More about it will come to income tax. Anyway, most companies are now coming under the new regime, but you can contribute any amount to a political party under the 80JJAA of the Income Tax Act. Absolutely allowable. No limit. 80G, there is a limit. Here, no limit. Take it. Anything you can give to a political party and allowed as a deduction. But 80G, it is 50% of the amount contributed, further restricted to 50% of 10% of, further restricted to 10% of 50% of 10% of gross domain, gross, what is it, GD income, gross total income. The amount will finally, the fellow will contribute 5 lakhs. He'll say, Srikant, should I not get 2 lakh 50? No, sir, your gross total income is only so much. I have to restrict it to 10% of GTA. Plus, on that, another, I have to restrict to 50%. So, how much I will get? You get 50,000 or 60,000. Oh, only that much. Sorry, that is how it is. That is 80G. Okay. Activities benefiting employees of the company. If it is benefiting employees, not CSR. Activities supported by the companies on sponsorship basis for deriving marketing benefits for its product. See, many times, for example, you will sponsor a T-shirt for the walkathon, sports. Supporting sports activity is CSR. But if your company's name is coming in the T-shirt, it becomes sponsorship for deriving marketing benefit. God, you won't get it. It won't qualify for CSR. Brother, you can claim it as an expense under marketing, but you can't put it under CSR. Activities carried out for any fulfillment of any other statutory obligation under any law. Actually, compulsory CSR is a statutory obligation. Anyway, welcome to the convoluted world of the MCA. But what they are meaning is, other than the Companies Act, if you are complying with, for example, pollution control equipment, you are complying with the Pollution Control Act or Environmental Protection Act. Based on that, you are putting pollution control equipment or balancing equipment, then that you cannot claim a CSR because you are only fulfilling a statutory obligation. Under the Factories Act, you have to have a shelter for women workers. You are putting up a shelter for women worker. Sorry, that is not CSR. You are only complying with a statutory obligation. Okay. Now, Schedule 7 provides the certain activities. I'm not going to go through it fully. It is there in the institute material. It's all laudable goals, nothing great. Many varieties are there. You see, a company need not restrict itself to education or medical or etc. But basically, it is like this. Okay. Measures for the benefit of armed forces, rural sports, nationally recognized. Then Prime Minister's National Relief Fund, PM Cares Fund, you can give. There is allowed CSR. Contribution of funds providing technology in rural development, slum area development, disaster management. See, to really understand disaster management, okay, you have to go to Hiroshima. There, they have a whole institute of disaster management, studies. I was in Hiroshima, where they give you training on how to handle, because it's not just about Holocaust. See, there is also, they have earthquakes. So these earthquakes, suddenly their earthquake will come. So, and suddenly some volcano will erupt. So the Japanese are constantly taught to be ready for disaster. And they are taught what to do in that circumstance also. So this can be a 1 minute, don't mistake me. I'm so sorry. Normally I wouldn't do this, but the gentleman is desperate for a date. And if he doesn't get it, he can't further again. Okay, there are many, many such things, that are there. See, animal welfare. Once one company, they were very insisting on Gorakshan Sala. So they were asking whether I can give Gorakshan, whether I can set up a Gorakshan Sala. So you can. It is CSR. You call it Gorakshan Sala, but basically it's animal welfare. You can. The cow is also animal. Develop it. Okay. While you are there, you develop other animals also. Other animals also can be supported. But yes, cow, you do for cow also. Okay. Now, buffaloes are also important animals. They can also be supported. Okay. Mahisha Rakshana Sala is also, yeah, good idea. We only go Rakshana Sala. Of course. Okay. So, any expenditure related to COVID-19 pandemic is an eligible CSR activity. Wow. Okay, very, very important. Important. Okay. Remember, yaad rakh dijiye. Okay, please. So every company having net worth 500 crore or more, turnover 1,000 crore or more. Actually, you can remember it from NFRA also. These were two conditions there also. Turnover 1,000 crore, 500 crore, net profit of 5 crore. 5 crore net profit. Okay. During the immediately preceding financial year shall constitute a CSR committee. That's all. Please understand. These have to contribute. Every company which is bound to constitute a CSR committee is also bound to have a compulsory CSR. The board's report shall disclose the composition of the CSR committee. So once again, net worth 500 crore or more, or turnover 1,000 crore or more, or net profit of 5 crore or 3. Even if single condition, sirf ek hi condition hai, then it is confirmed. You have to contribute to CSR. For calculating net profit, two items need not be considered. If you have an overseas branch, profit arising from overseas branch need not be considered. Suppose your company has a branch in Dubai. The Dubai branch is earning, say, 2 crore profit. Your own net profit, total company net profit, including Dubai, including Dubai, 6 crore. Dubai alone, 2 crore. Now, net after you reduce Dubai, what happens? 4 crore, less than 5 crore. If your net worth is less than 500, turnover less than 1,000, your profit is 6 crore, more than 5 crore, but your Dubai branch is earning 2 crore out in that 6 crore, 2 crore. That has to be removed. Why do you think this is so? Simple logic, man. They are not allowing you to do CSR outside India. Na? So any foreign income also they cannot consider for calculating. Got it? Similarly, dividend received from other companies covered under and complying with Section 135. See, you are an unlisted company. Okay, you are governed by CSR. Your P&L account income side includes a dividend. Those companies are all listed companies already complying with CSR. Ladies and gentlemen, will note that this is not specific to listed company. It's talking about every company. Even unlisted companies are covered. CSR is applicable to unlisted company also. And listed companies are not automatically covered. Ladies and gentlemen, will take notice. Just because you're a listed company, you're not covered. You should come under this criteria. Got it? Let us say that you are getting dividend from another company, which is covered by 135 also, and that is complying with 135, then dividend received from that company can also be reduced. Now, in my example, your net profit was 6 crore, Dubai branch profit 2 crore, so balance 4 crore, net profit less than 5 crore. If the other two conditions are also not satisfied, then no need for CSR committee. Okay. Net worth definition we already seen. I don't want to waste your time. In preliminary, you have seen it. Very important two things. Paid up capital includes preference capital. Revaluation reserve not to be considered as part of net worth. Okay. Very, very important. Security premium is included. Okay. RERA Limited, a company incorporated under the Companies Act, having paid up share capital of 10 crore, turnover of 100 crore, net profit of 3 crore, and securities premium 300 crore as per the auditor accounts. The CFO informs the company that the CSR committee is required to be formed. Now the directors seek your advice. Second opinion. What do you think? Dhanush, I will teach you the compulsory percentage and only close today's class. Don't worry. Give me another 2 minutes. So, see, check it up with this. First is net worth 500 crore. So, net worth means paid up capital 10, security premium 300, I get only 310. Turnover 100 crore, less than 1,000 crores. Profit 3 crore, less than 5 crores. So, it is not applicable. Profit is 3 crore. Current year profit is 3 crore. Okay. So even if you take 3 crore plus the 303, 310, 313, still it is less than 500. Got it? So RERA is not fulfilling any of the criteria. So it is not obligatory for RERA. Okay. Here, ABC Limited, net worth 100, turnover 500, net profit 1 crore, less than. Now, this was on 31/3/21, but on 39, this has become 100. No problem. Oh, turnover has become 1,000. Net profit 5. Now, I am now considering, say, in October 21, I am considering some issue to CSR were applicable to me, the board meeting. Now, you can boldly say it is not applicable for 31/3/21. For 31/3/22, it will be applicable. You got my point? As on 31/3/21, no. But 31/3/22, turnover will be more than 1,000 crores. Net profit may be more than 5 crore. It may be applicable. But for 31/3/21, no. Previous financial year, it is not satisfying, does not fulfill. Therefore, it is not required to full constitute. So for calculating these limits now, you will see only balance as on the 31st March of the immediately preceding financial year. Now, okay, a company should constitute a CSR committee. A private company, normally it should have 3 members. And a private company having 2 directors, it's enough if those 2 people are there. The foreign company covered under the rules shall comprise at least 2 persons, which 1 person should be an Indian. Okay. Now, quickly, I will go for the percentage and then come back. Okay. Yeah. The board of every company required to form CSR committee shall ensure that the company spends in every financial year at least 2% of the average net profits of the 3 immediately preceding financial years. So, first you have to check whether you are falling under the CSR committee. Yes, then you have to form a CSR committee. Then if you are coming under that category, then every year, in every financial year, you have to contribute at least 2%, minimum 2% of the average net profits of the 3 immediately preceding. Sir, we are only 2-year-old company, then average of the 2 years. Sir, I'm only 1-year-old company, then that 1 year ka profit 2%. Sir, I have not yet completed 1 year. Then how it will be possible? Yeah, I cannot even find out whether you're coming under CSR committee. Wait for 1 year, finish it, then check up and then decide. Okay. Preference shall be given the local area and areas in and around. Companies may build CSR of their own personnel as well as agencies through institutions. See, I used to do a lot of training for Indian Oil Corporation. Now, Indian Oil Corporation has a national level CSR department headed by a director. They across India, they do CSR. They have a huge fund. Imagine 2% of the average net profits of Indian Oil Corporation. Huge amount. Tata Group, huge amount. You understand? So they have to spend it. In fact, many companies are finding it difficult to spend. As part of my Rotary Club, I am supporting one school here where economically weaker section society are studying. Children are studying. And so we are doing a lot of good. We built a toilet block. For that, we got CSR fund. You can. We go to the company, we tell them. So if they have any CSR fund, they will route it through Rotary. We will give them the project, etc. We will show them what we are doing. We will contribute. And we will also get other, they will also contribute. And we will show them that becomes a project for their CSR. So this is 2% of the average net profits of the immediately preceding 3 financial years. Okay. Now we'll come there. Okay. Every company which ceases to be a company covered under this section for 3 consecutive financial years. So you have to wait for 3 consecutive financial years. So last year, I didn't satisfy. Still, I have to contribute. Next, current year, I didn't, still I have to contribute. Third year, end, I am still not complying. Then I am out of the CSR net. Okay. So it need not constitute. Again, if you meet the criteria, again you will come. Okay. So I came into the CSR net 1 year. My turnover became 1,000, but my net worth is below 500. My profit is below 5 crore. But 1,000 crore turnover. So that year, so let us say 24 March, 1,000 crore turnover. So 24, 25, I am bound to give CSR. So for profit of average profit of 24, 23, 22, 2% I have to contribute in 25. Before 31st March 25, I have to spend. Now 25 March, my turnover is going below 1,000. I'm not satisfying any of the criteria. Still I have to contribute 25, 26. Then 26 March also, no. Still I have to contribute. Okay, 27 March, I am not satisfying. Then 3 consecutive financial years, not 25, 26, 27, I have not satisfied. Then I will go out of the CSR net. Are you able to understand? 3 years they want. So that the average will go. Till such time I have to calculate average of the immediately preceding 3. Okay. You got it? Now, see, because in 25, I will still have 2 earlier years for calculating. 26, 2, 1 earlier year. 27, nothing. But still I have to contribute. 37, 28, I'm out. Okay. Where the amount to be spent by a company on CSR does not exceed 50 lakh rupees. See, the amount, when I calculate 2% of the average, now it does not exceed 50 lakh rupees. Then the requirement for constitution of the CSR committee shall not be applicable. Okay. So the board itself will become the CSR committee, provided the amount does not exceed 50 lakh rupees. Right? Now, these are all issues relating to the CSR policy, etc. More of theory. I'm not into. You can also sublet the CSR work to a company registered to a trust, okay, which is registered and available for CSR. What the trust, which wants to be eligible for CSR activity should file form CSR 1 and that should be approved. And once they registered under with CSR 1, then they'll get a CSR registration number. Only then they can get contribution for CSR. Okay. Jointly also companies can do, but their expenditure should be monitored in such a way that both the companies can report separately on the projects or programs. Sometimes you might undertake a project which is going beyond 1 year. For example, the toilet is a classic example. We started the project in 23, moved on to 24. Finally, it got completed in 25. This is called a multi-year project. So we went to the company and said, boss, we can't take your entire money, ma. We give you only so much. As and when I need, I'll come back to you. So maximum 3 years, you can push it. Okay. In the case of an ongoing project, the board should monitor the implementation of the project with reference to the approved timeline. So what we did, we gave the duration. So first ground floor, first floor, 2 floors, complete finishing. So we need 3 years, 2.5 weeks. We wanted 2, but it became 3. With spillover of another 3 months. So we took money that way. It was total project was 59 lakhs hardly. They gave 25 lakhs. We raised 25 lakhs through fundraising. So why I'm saying CSR is very good. So average 2% of the average net profits. The administrative overhead, for implementing this project, you will have administrative overhead now. That should not exceed 5% of the total CSR expenditure. The administrative overhead should not exceed 5% of the total CSR, whatever it is. So Tripati Limited, as listed company, has made the following. Just take another 5 minutes and we'll close this. Thereafter, we can go forward. In the next class, we'll take up internal audit and auditors. Tripati Limited, a listed company, has made the following profits. The profits reflect eligible profits under the relevant section of the Companies Act. Okay. So these are eligible profit, no further calculation needed. So we have to calculate what is the amount the company has to spend towards CSR. So financial year 23 is given. So we are now supposed to calculate for 23, 24. Okay. So I'm so sorry. This is wrong. This should be 23, 24. See, 23, 22, 23, 21, 22, 20, 21. 3 immediately preceding financial years. Total A by 3, average 50. Okay, 50 crore. 2% of 50 crore is 1 crore. Got it? 2% of 50 crore is 1 crore. So 1 crore is the amount to be spent in current year. Okay. If you have any doubts, you can ask. Right? Now, what I'm going to do is, I'm going to stop here. In the next class, we'll finish the balance of CSR and internal audit and start audit. Okay? If you have any questions, you can ask me. There is no maximum percentage, Dhanushji. Your heart, whatever your heart says, there's no maximum. But my suggestion too is enough. See, again, I'm telling you, I'm a capitalist. Your goal is think you got surplus, you give it. But be careful. See, this year you give more, next year also you should be able to give. Every year, see, I fixed 10%, okay, of my income. With something that I can manage every year. Till such time, don't do. It's the point. But there's no max. Statutorily, no max. But minimum 2%. Max, whatever your heart says. Okay, so nice. Thanks for your great support and cooperation in listening to me. Let us sort of call it a day and hope to meet again when we can finish it. Thank you very much. Bye. Sir, class over, sir. Yeah. Bye. Good night, sir.